Welcome to this course on how to buy a used car, negotiate the best price for yourself, and end up with the car you're happy with. My name is Alex Kinedinik, and I'll be your instructor. In this video, I'll tell you a little bit about what to expect from the course, and we'll start right away. So in this course, we're going to talk about budgeting, understanding what kind of a car you can afford, understanding what kind of a loan or financing plan you can get. And that's going to be the beginning of your negotiation, because once you understand the budgeting and the finances and the loan structure that you're probably going to end up with, you're going to have the framework for how to negotiate the optimal car price, because I'm also going to show you how to look up car history, and by using that, how to negotiate the best possible price for a car by understanding the strategies that dealerships use to maximize their earnings and where they can come down on the price and how and where they can't. So you'll know exactly how to negotiate, and you will never wonder, did I get the right price? You'll know exactly the leverage you can bring to the situation so that you can know exactly how much or how little the car dealership can discount the car for you, so that you'll be confident about the ultimate price and happy with your purchase. So welcome to the course, and let's begin. Before you can make any kind of a car purchase, you have to budget in order to understand what kind of a car you can afford. And I know that your heart is telling you, let's get a Lamborghini or a Ferrari. Let's get it. Come on. Let's get one of those. But you can't really do that. And in the back of your mind, you know you can't do that, because you know that you're working within a budget. Especially if you're buying a used car, you're certainly working within a budget. So first, you have to tell your heart, hold on a little bit, and let your brain take over for just a little bit, so you can understand how much you can afford and what your budget should be like. So let's discuss your budgeting. First of all, for most people, and of course, everyone is different and all the scenarios are slightly different, so your scenario may differ a little bit, but as a rule of thumb in general, you want to keep your vehicle payments 10 to 15% of your monthly income, not more than that, and you want to keep all vehicle costs. That's including gas, including insurance, including registration, including parking if you're going to pay for that, including maintenance, whatever it might be for the kind of car you're going to get, under 20% of your monthly income. Now, the monthly income idea also differs for different people, because what if you don't have a job now but have a lot of money saved up, so you're not really taking from your monthly income? So calibrate accordingly to your financial ability, but this is essentially a barometer. Now, also, you want to aim to take a loan of 48 to 60 months or less if possible, because the rule of thumb that you want to really remember is the longer your loan term, meaning the more months your loan goes on, the more you're going to end up paying, because you're not just paying for the car, you're also paying interest over all that time. So a common method that dealerships use to look like the car is priced cheaper is to extend the loan term, meaning more months, so you pay less each month, but you pay more total because of the extra months you're paying interest. It's a very important rule of thumb to keep in mind when buying a car. Now, also, we have to discuss your down payment. Generally, you should expect to pay at least 10% of the car's value in down payment. Obviously, the more you pay in down payment, the smaller your monthly payments will be and the smaller your loan will be, meaning that the car will be cheaper. So again, the bigger the down payment you can put down, the cheaper the overall price will be. And I want to give you another rule of thumb to help you do easy math. For every $1,000 that you put down, it lowers your monthly payment roughly $15 to $25, including not having to pay any additional interest on that if that was a part of your loan. And just something to keep in mind is, let's say you are able to get a loan for 6%. That means you're going to be paying that extra 6% as the loan interest. And in general, you want to pay as little interest as possible, sure. But let's say you're a genius investor or just a good investor, and you can make that kind of money if you preserve your cash. So then you don't want to pay extra down payment in cash, because you can make more elsewhere. But if you cannot make more elsewhere, and if you have the additional cash, most of the time it's wiser to put down a larger down payment. So once you understand what kind of a monthly payment to aim for, what kind of a down payment to aim for, the next step for you before going to the dealership is to get pre-approval from a bank or a credit union for a loan so that you can understand what kind of an interest rate you can get in a loan. And in order to do that, you can just contact whatever bank you already bank with, or you can apply online at various banks, but you need to get that pre-approval. Similarly to if you've ever bought a house, you also need to get a pre-approved loan so that you can understand what kind of a loan you can get and at what rate. Getting loan pre-approval from a bank will help you negotiate a better loan rate with the car dealership. Because if you come to the car dealership and you say, I have an X amount loan that I can get from a bank, the dealership will just not offer you a larger percentage on your loan. So that's already helpful. But you can also negotiate a lower percentage from the dealership, because the dealership can also give you a loan, and the dealership might try to beat the bank's offer. So you want to, as a consumer, get the bank to compete with the car dealership to give you an ultimately lower loan rate. And the pre-approval process will also help you get your credit score. And you can also find the credit score for you on various sites like annualcreditreport.com or other ones. If you find that, like, let's say you have a very low credit score, in the next month or 2 or 3, you can do things to raise your credit score in order to get a better loan. These are all things you would do before actually walking into a car dealership in order to get a better price, because the negotiation does not start at the car dealership, it starts before you get there. And if you do all of this, what's going to happen at your car dealership when you walk in is, instead of the wrong thing to say, but the logical thing to say, most people say, I want to keep my monthly payments at X, or I want to pay X a month. Because that's logical, right? You kind of know your budget, like, okay, I can afford this a month. But actually, that sets you up for a pitfall, because the dealership can definitely lower your monthly payments by extending your loan term, essentially making your loan longer, meaning that overall you're going to pay more. So it's not what you want. What you want to do is say, please quote me on the out the door price. I'm pre-approved at X percent, whatever percent the bank gives you for a number of months. If you can beat that without any add-ons, I'll sign today, right? You're making the dealership compete with the bank to give you a better loan rate. And if you can also add to that you're going to provide a larger down payment, you can get yourself a very, very favorable car loan, which in many cases beats a lower car price, which of course you'll also negotiate on the car price itself, but the loan is where many people get burned. And in this case, you won't get burned on that while staying within your budget, while getting the best of all negotiation scenarios. Now I want to share with you a monthly budgeting ledger so that you can understand your total car costs. And as you can see, you can do this for many months and budget for the entire duration of your loan. But let's say we just do it for 1 month so you can understand how it would work. So let's say month 1, you would have your loan or lease payment. In our case, we're mostly talking about loans. So let's say our loan and car payment, let's say it's $300 for you. It might be $1,000. You would enter whatever is relevant for you. The figures here are just fictitious and they're an example for us. So for example, your insurance might be $100, your fuel and energy costs might be another $100, your maintenance or repairs may be protracted from an annual number on average of like $30 per month perhaps, then maybe taxes and registration costs, another $10, parking if you pay parking, or if you don't pay for a parking garage, perhaps you'll be paying for parking tickets. Maybe you budget that at around $50 if you're a little bit sloppy with your parking tickets, or if you're good, a little less. Maybe the cleaning costs, whether you clean it at car cleaners or you clean it at home, there are some costs. So you add all that, and in Excel or in Google Sheets like I'm doing, it can add it for you. So you see, if I say cleaning is, let's say $50, it increments my total cost You may not have a cost per mile, that's more for lease and things like that, but essentially you have the cumulative cost. So that's something you can recreate on your own or download from this lecture so that you can more easily budget. Obviously, you can also do this on a piece of paper. It's not rocket science math, but it's just easier to calculate it and protract it for the duration of your loan. But really, the 1 month snapshot to me feels like it's the most helpful, because you might say, oh, my monthly payment is $300. Great, it feels affordable. But then you're like, wait, $300? What about insurance? What about this? What about And then it's like, okay, I double that. And of course, these numbers are low, like $300 is on the low side. What if you're paying higher? What if your insurance is higher? Suddenly, you may be paying 4 figures overall. So you really want to keep this in mind for your budgeting so that you don't get nasty surprises later. And once it's all apparent to you and you know what your costs will be, you can budget that into the kind of vehicle you can get and be happy with. So this is not to discourage you, but to add sanity and organization to your budgeting so that you can be more certain of what you can afford, so you never have to return the car, you can be happy with your car, and never second guess your buying decision. Now let's discuss the pros and cons of buying a used car from a dealer versus a private individual seller. First, let's start with the benefits of getting your car from a private seller. Because there's no dealership, and dealerships have to make a profit, so they're a third party, they typically add a markup, which means that if you buy from an individual, you can often get the car for 5 to 10 to even 15% cheaper. This is arguably the biggest benefit of buying a car from a private seller. Additionally, the private seller isn't good at upselling things, so there are no add-on dealership fees or any hidden costs. Usually the price is pretty upfront. And another benefit that might sometimes happen is that you might know the private seller and you might know that they've been a good owner. They've kept maintenance records, they've been careful. Of course, on the other hand, sometimes you have no idea and you have no protection against that. But if you know the past seller, you have extra reassurance that they've taken care of the car well. Now, to contrast these private seller benefits, there are some pitfalls that you might fall into while buying your car from a private seller. The first one is that you have to understand there's no legal protection from any kind of a scam. If they say, oh, I've only driven 1 mile in this car, and you see in the odometer it says, oh, it's 1 mile, but maybe they've tweaked the odometer, it's a common scam, and you fall for that, no legal protection. You bought it, that's it. So the cars are sold, quote unquote, as is. After you pay and drive away, all issues are your responsibility. If you drive away and the next day everything breaks in the car, it no longer moves, it's your problem. It's a sad thing, but legally it's your problem. Usually that doesn't happen, but if it does, you have to understand that you have no legal protection against such occurrences. Also, if you're buying a car from a private seller, you have to do more work. You must handle the DMV paperwork, smog certificates, and title transfers, all those things. And additionally, there's another potential pitfall that if you have a car that you currently have that you want to sell and trade in with a private buyer, they're not a dealership. They can't trade cars in. They can't accept your car. So you have to figure out how to sell your old car on your own. They don't provide the option to trade your old car in, which might be a good thing because you might become the private seller for your old car and maybe get more money, but it does cause you to have more work. Just something to be aware of. Now, on the other hand, sometimes you have no choice except to buy from a car dealership because financing options, meaning getting a loan, are often not available for private sales. Like an individual is just not going to give you a loan to pay over 48 months. That's just not a thing. So if your only option to afford the car you want is to get a loan for it, if you can't pay all the money up front or most of it, you must, generally speaking, buy from a car dealership. So you may just have no choice if you can't afford the car up front. Because to get financing, you might have to go through a bank and you might need the car dealership because banks don't work with private individuals. So these are the pros and cons that you really should understand before you buy a car. so that you are a wiser consumer and you understand what your options are and when. When buying a car, there's a lot of terminology and it can feel overwhelming. And while it might take some time to get comfortable with all the terminology, there are some things that are important to understand. And one of them is the vehicle title, sometimes called a pink slip. Now, if you're in a different walk of life and you might hear the word pink slip and it means that you're getting fired from your job, that sounds very bad. You might have heard that. I'm getting a pink slip means I'm getting fired or mass layoff. That's not the case here. In our case here, a pink slip or vehicle title is a good thing. It's a legal document. It provides proof of ownership and it's issued by the Department of Motor Vehicles, DMV. And on that legal document, it has the owner's information and the car's information. And the reason it's important is you cannot legally sell, buy, transfer, or register a car without a car title. So you need this document in order for the transaction of the car to take place. And if you buy the car outright, let's say for cash, you should get that legal document proving that you're the owner of the car. But there's an important note to understand that if you finance the car, meaning if you take a loan, before you pay off the loan, you don't actually get that legal document. The organization, in other words, the bank or the dealership that provided the loan, keeps the title until the loan is paid off, and only once the loan is paid off, you get that car title. And it might feel like a detail, oh, okay, I get a document when it's done, but in reality, you can't transact without the car title, so you must not lose track of who's owning it, because that's the main document that proves legal ownership. Another very important definition I want to go over is a VIN number. So let's quickly discuss the VIN number so that you know what its role is and why it's important. VIN stands for Vehicle Identification Number. You can think of it as a fingerprint. You can recognize a vehicle by that fingerprint, by that vehicle identification number. No two vehicles have the same vehicle identification number, so you can look up any vehicle's history by that VIN number. And what that VIN number is going to show you is accident and damage history, odometer readings, so you can detect rollbacks of the odometer, service and maintenance records, open recalls or safety issues. And there are many other things you can look up, like ownership history and prior registration states and accident history, theft history. And what's very important are title brands. Now, you might think brands. Are we back to talking about Ferraris and Lamborghinis? No, not those brands. Title brands are very important in that it tells you whether there has been significant damage to this vehicle. What you want is a clean title brand. That means it's been fine. What you don't want is salvage, rebuild, flood damage, or other kind of red flag labels, because that might show either significant damage that's been rebuilt, which you might not know just by looking at the car, because from the outside it looks fine. But if there is significant damage and the car has been rebuilt, that would lower the price of the car significantly. And so you must know that. And the way you transparently know that is by looking up the title brand, by knowing the VIN number. That's how it works. And that's why the VIN number is really, really, really important. So when you are buying a car and you're ready to buy one, it's likely that the dealership is going to already look up your car and have a report on it. But if it doesn't, you want to also look it up on your own to check whether there's anything that's hidden or anything that's kind of a yellow flag or a red flag, because you have that opportunity to have the car's history be completely transparent. And again, through the VIN number, you can look up the title brands to make sure that there's been no negative significant history with this vehicle, which takes away the risk of buying it. And if there is negative significant history, you should be able to get a big discount on the vehicle. Now, I want to show you how to look up a vehicle's history by entering a VIN number and reading the entire history report. And we're going to use VinClarity for that. VinClarity is a popular and affordable service for doing this. A car report can be $9.99 on VinClarity compared to Carfax, where you can pay as much as $40 to $45 for a single report. So it's much more affordable. And the reason I like it is because it gives you the full picture. If you compare it to competitors, yeah, you can get the vehicle history just like you can with VinClarity, with Carfax and AutoCheck, but then you don't get some things with other vendors like online valuation. You don't get that with other companies like Carfax and AutoCheck, while they're also more expensive to get your reports from. And as you can see, Kelley Blue Book gives you very little of this information. So you get everything from VinClarity that you'd have to use multiple services. So you get from VinClarity the same information that you'd have to otherwise use multiple services for a lower price. The reports are completely transparent and they are NMVTIS compliant reports with source links, instant lookups, and global VIN coverage. So let me walk you through an example of a VinClarity report so you don't have to pay, and we could just explore it together so that you know what you're going to be seeing if you ever get one. You'll only really need to get a report like this if you're already interested in a car. Like if you're at a dealership or if you're buying from an individual and you are interested in a specific car, that's when you need to get a report like this so that you don't have any funny or very, very unfunny surprises. As you can see, it's a very, very long report. I can keep scrolling, but at first you just see some basic information, the date, the support information. Then you get to the car overview, the VIN number, the vehicle itself, manufacturer, etc. Then the overview, last odometer, past owners. You see you have 2 records. Okay, so you know there's 2 owners in the past. 28 history records you can look up. Prior vehicle use, you can see whether it's been used in a fleet or as a rental, as a taxi. In this case, no. Then as you can see, that state title brand that we discussed earlier, it's clean. This is one of the most important things to look up, but there's everything else also, like accident damage, minor, multiple damage events. Okay, if they're minor, at least now you know, because if they fix the body, like the body looks fine, you wouldn't know, but now you know. So this can aid you in the negotiation. There's no open recalls, things like that. No. You want to see all these no. Then you can see the different owners, owner 1, warranties, odometer readings. So you can even track when the car has been used more or less. Not that you really need that information, but you have it. You also get the estimated market value that you otherwise get in a kind of Kelley Blue Book. Here you have the market value. It's based on mileage, the make, the brand, etc. Then you get to see the history, like past emission inspection, past this, accident or damage report, minor damage reported, repair, fender reported. So you can even see what was the problem, just a fender. So in our case, if I read you the entire report, it will be pretty boring. But in your case, you want to do this boring work of reading the reports of the cars you are interested in, because if you see anything, let's say this little thing here about the fender, okay, then you know that you can negotiate the price down. Now, it already estimated the market value, but during your negotiation with the seller, you can say, hey, well, there's the estimated market value, but also there's this little accident. Can you consider the little accident? And we take a little bit of the price down. And then maybe it didn't pass some emissions. You might say, oh, well, you see this also happened here, right? Then left front impact collision accident reported. There was a police report, etc. Okay, it's not, the cleanest of records. So if you didn't have this report, you wouldn't have as many arrows in your negotiation strategy. But now you see, oh, well, what about this incident? What about that incident? What about this? Now you can get a lot of concessions. Not to mention that sometimes you might just want to back out of the purchase because you're thinking, well, yeah, here the accidents have been minor, fine, but what if it was slightly more serious? Then you might think twice and you might back out because it might cost you more in the long term to get a car with potential lingering damage somewhere inside. Now you also want to scroll down all the way and read through all the history and get through recalls, because there may have been recalls. Like here, this vehicle has gone through some recalls. That's just another arrow in your negotiation with the owner. Say, hey, well, what about these recalls? And feel maybe it's dangerous. They'll, of course, tell you the car is fine, etc. But you'll be equipped with more information for your negotiation or the eventual buying decision. And you also have some basics like safety ratings, available equipment, and that's the end of the report. So there are some core pieces of information that you want to extract. If it's all clean, that's amazing. But a used vehicle that's been used for a number of years will likely have a few things that happen to it, and having the vehicle report and actually reading all the details is the best way to learn about the vehicle's history. With this video, let's begin a new section of the course in which we're going to discuss used car price negotiation strategies. And in this video, I'm just going to give you the basic introduction, and in the coming videos, we're going to get more into the details of the negotiation process. So first and foremost, what do you want and what should you ask for in a negotiation? Here's your rule of thumb. You don't want the lowest price per month, even though that seems like a logical ask. You want the lowest out the door price, including taxes and fees, because the price might be $20,000, but after taxes and fee, that $20,000 might easily become $24,000. So you want to know what the taxes and fees are, so you can negotiate those down as well. And very often the fees you can get waived if you know what they are. Of course, if you don't ask what they are, they're going to come as a surprise to you later, which you don't want. So that's the first thing to keep in mind. The next thing to be aware of is that you can get a different price at different times, and that is times of the year. For example, there are various sales at the end of the month, at the end of a quarter, at the end of a year. Also, on days where sales are low, like if it's bad weather, there's nobody in the dealership, everybody's home, nobody's shopping for cars, or if it's like a weekday and people are mostly working, they're not shopping, and the salespeople are just sitting around, they'll take more time with you. They'll be able to negotiate more. They'll value your potential as a customer more because there just won't be other options for them to sell to. And of course, very importantly, car dealerships have big sales on various holiday promotions. So I want to tell you exactly what those are. Here are the best holidays for deals. During winter, it's approximately the Christmas week season from around December 20th to the 31st. And if you don't get a good deal on a car then, during winter, the President's Day during February is also typically a good month for deals on cars. Now, during the spring and summer, you have the Memorial Day sale and the 4th of July sale. And in the fall, you have Labor Day sale and the Black Friday sale that happens every November. But generally speaking, December 20th to 31st is pound for pound the best time to get good deals. Although with some caveat, because here's what happens. Let's say a dealership has a big sale from December 20th to the 31st, and they sell many, many cars, and they know that they're going to get new models and all kinds of new cars the next month and during the spring, so they have to clear out their inventory so they can replace that with new cars. But not all cars from the last year were sold. It almost never happens that all the cars sell, so just about most dealerships have some inventory left over. So some buyers go shopping after the holidays because the dealerships want to clear out their inventory. And so what happens is you have thin inventory at that time. You don't have as many choices. Like if you want a purple car or a pink car or whatever, might not be available. Or, some model or make that you want from a specific year might not be available. But the inventory that is still available may be sold for an extra good price because that dealership needs to clear that space for that car that isn't selling. Because for them, they're desperate. Because if that car didn't sell during the holidays, during the best time of the year, it might not sell for a long time. And if a car is not selling for a long time, it's losing them money. Not only the car is depreciating in value by sitting there, but it's taking up a spot of another car that can sell. So they'll be happy just to get rid of it. So if you're not picky, or at least not too picky, you want to be picky so that the car you buy doesn't fall apart. But if you're not too picky, you may be able to get an even better price after the holidays. Although, of course, there's risk because if you wait after the holidays, inventory may be so thin and there may just not be such significant extra discounts anyway, but you might miss out on the big holiday deal. So if you get a great price during holiday deal, you might want to take it. But of course, if you're in no hurry to get a car, you may kick the tires a little bit and see what's available after the sale. It's totally up to you. Both tactics are fine. They depend on how soon you need the car. And honestly, whether you have the nerves of steel to wait it out, because it does take a little bit of patience and can cause some anxiety to wait for an uncertain amount of inventory later. So these are the tips for the timing of when you buy. But whenever you buy, there are some things that always hold true. You should research local dealer prices so that you can price match. So you want to get competing quotes, like from the local newspapers. They very often publish car sales or ads that dealers run. And definitely use quotes from the Kelley Blue Book, and also local listing sites like Craigslist, AutoTrader, Facebook Marketplace, etc. You just want competitive quotes, because if you're quoted by a dealer, hey, here's the price, and you come back to them and say, here's a printout of same car or a very similar car on Craigslist or AutoTrader, and it's $1,000 cheaper, and you'll say, well, it's $1,000 cheaper there, I'm just going to go buy it there. Of course, the dealer is going to be more likely to make that concession. So having price match options is a must. Now, another thing many people will ask about and wonder about is, what if they have a car to trade in? As a rule of thumb, the value you can get for your trade-in car, the current car that you own, is a completely separate negotiation. Don't mix the trade-in negotiation with the negotiation for buying the car, because the negotiation just becomes more complex and it's easier to miscalculate. And if you're not experienced in this negotiation, the dealer is really experienced in this negotiation. That's all they do. That's their main job. So don't overcomplicate the negotiation. Keep these negotiations separately and get the best price in both cases. Now, also, at all times, stay polite and respectful. Of course, firm, but polite and respectful, because many clients, they come in and they're snooty, they're snobby, or they're impatient, or they lose their cool during negotiation and storm out. That does not help at all. First of all, the salesperson doesn't deserve this. It's their job. They're just trying to do a good job. And second, it's just not the right thing to do. What you want to do is understand that negotiation works best when both parties are respectful and calm, and even understanding of each other's position to a point. A friendly, confident tone will get you better results than an aggressive or a cocky kind of a tone. So even if you're not getting the negotiation to go as you wanted, nevertheless, stay friendly, polite, and respectful. It's not only the right thing to do, but it will also get you a better price. Now, let's get into some specific used car buying negotiation techniques and phrases that you can actually say and use during the negotiation. But before that, there's the issue of negotiation positioning. And if there is one idea to keep in mind, it's this: the party which can be more patient in a negotiation has the upper hand. This is true for almost all negotiations, and it's very true for car buying negotiations. And the dealership will do whatever they can to make you not patient. They'll say, this promotion runs out this weekend. Sale ends at the end of the holiday. Let's say they're doing Memorial Day sale or Christmas sale. They will explicitly say that the sale ends after the holiday. That is a sales tactic that creates scarcity and causes the potential buyer to have a little bit of anxiety, so that they are more incentivized and want to buy, because it's very uncomfortable to live with that anxiety. So that's the headwind that's working against you when you're trying to be more patient. But your job as a buyer is to be more patient. So your job during negotiation, during the positioning, in the beginning, is to show that you're not in a rush to buy. You may be in a rush to buy, but you can never show that. You want to show that you're a serious buyer, but you can walk away at any time, because you have many other cars you can buy from other dealers or private sellers, or that you're just looking for something specific, and if it's not there, you're looking for something that's just right for you, and it's well within your right to look for something that's just right for you, so you're not in a rush. You don't have to even say that. You can say something like, I'll think about it. Since I've seen similar cars at lower prices, I'll take some time to think about it. Or you can say, I'll take some time to discuss this with my family. Anytime you can say, I'll take some time. Let me think about this. You don't want to overuse this because it does kind of turn off the salesperson. Like they know you're not going to buy now, so they need to move on to somebody who will buy now. But you can sprinkle this idea in that, yes, you'd like to buy now, but you don't have to by any means. So you want to hint at that. That's just positioning because immediately it puts you into a position of strength. Now, this is kind of a partial bluffing technique, partial positioning technique, but you also want to use actual real facts instead of bluffing. So you want to bring up any issues in the vehicle history report. You want to have the history report ready. You want to have browsed through it carefully. You want to look at the car thoroughly for any cosmetic issues like scratches or interior wear and tear, because even though some accidents that are so minor may not be reported, they might still happen, and that's what you want to see by looking at scratches and wondering, hey, what is this? Why is that scratch there? How come so many scratches here? What is this little dent there? You want to be thoroughly looking at the car cosmetically, inside and outside. Not because you want to find true love with somebody who's beautiful on the inside and outside. It sounds like a fairy tale, right? Beauty on the inside and out. But really, you're looking for things to nitpick in order to knock down the price. Not too much, because too much nitpicking can backfire. Too much of anything can backfire. In negotiation, you want to be thorough. But if you're overly thorough and it just takes hours and hours for everything to happen, the salesperson will have to move on, or they will just get turned off from that sale, because you sometimes lose more when you win something tiny but spend so much time on it. So you don't want to be too petty. That's what I'm getting at. But you do want to look for additional wear and tear. If there are reports in the vehicle history report that, the brakes haven't been changed in a long time, or the tires look worn out, or the last maintenance was a long time ago, or last oil change, or whatever the car needs. Every car is a little different, so you have to figure out what the car needs. And when it's due, you want to bring that up and say, the tires need to be replaced. That's an extra $500, depending on the car and the tires. So these are all the things you want to do by being just thorough and factual, looking at actual facts, competitive prices, history of the car, and also just being very vigilant. Of course, there's a limit to how vigilant you can be and how many problems you can find if you're not a car person. Like if you're an accountant, you probably don't know as much about cars as a mechanic. So a common strategy is to have a private inspection by an actual mechanic that you would hire. That private mechanic's inspection may cost you $100 or $200, but it can save you thousands in a negotiation, and even more than that if they find something truly wrong with the car that you wouldn't have any idea, but they found something and you would actually realistically walk away from a bad purchase, then they saved you many thousands of dollars. So it's not a bad idea. In fact, it's a prudent idea to get a private inspection, because then you'll be armed with so much ammunition for getting the price knocked down. And an example of something you might say is, if the mechanic estimates $600 for new tires and brakes, can we adjust the price accordingly? Boom, right away. You see, you need new tires and new brakes. It's got to come out of somebody's pocket. But the buyer should not be charged for the car as though it's the same car with new tires and new brakes. So it's a very fair thing to ask. Now, another very savvy thing to do is to avoid unnecessary added fees. Very often, you'll see dealerships add things like paint protection, VIN etching, fabric guard, documentation fees, and other fees on top of the actual car price. So what you can say is, which of the add-on fees are optional? Please remove all the fees I didn't request. You want to know which of the fees are actually optional. Sometimes you might get a direct answer, sometimes you might not, so you'll have to dig a little deeper, but you should definitely find out which fees are funny fees and which are realistic. And that brings me to another point, is that if you do all of these, knock the price down here, knock the price down there, come at a good sale price already, etc., 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 you will have negotiated yourself a pretty good price, and you'll start asking, so what price should I settle on? Because knocking the price down can become a infinite, never-ending exercise. Like you always want the price to go down, and you always wonder, is there wiggle room? Am I at the bottom price? You never know. The dealer doesn't tell you. So you're always wondering, am I getting duped or am I being great at negotiation? And so there's a tendency to keep negotiating, which kind of wastes people's time. So once you reach a fair price that aligns with your budget and your previous research, and it all makes sense, and you're getting a deal that's better than what you've seen out there, take the win. Because you just get diminishing returns when haggling for 2 extra hours, or another week you wait and come back to the dealership and you just get maybe another concession of $100 or $200 over the next 4 years. At some point, winning a few extra dollars here and there is like winning no dollars. It's pretty much the same. The impact on your life is near zero. You might feel a little better about yourself, but you may also lose the deal. You might irritate the salesperson. You might cause other problems. So you just want to be careful not to over-negotiate. And one thing that can help you do that is, prior to the negotiation, pick a price that you would be happy with. And likely, if you've done all the things we've discussed, you'll end up at a price that's at or even better than what you were hoping to get. So take the win. As long as it's the car that you want, it doesn't have any red flags, and it's looking good, take the win and enjoy your purchase. Now I want to explain a very important concept, and that's a term, certified pre-owned, sometimes abbreviated by CPO. So remember that, certified pre-owned car. What is that? It's a vehicle that's been inspected, refurbished, and recertified by either, this is very important, the manufacturer. So like if you're buying a Honda, Honda actually does that fixing and refurbishing, or the dealer does enough work to comply with certain rigorous set of standards. This is a big deal. As a buyer, it makes the purchase of this car for you not risk-free, but it does decrease the risk significantly. Compare that to buying the car as is from an individual. If you drive away and the next day everything falls apart, like in the cartoon, everything, the wheels crash, the doors crash, it's your problem. Just fall to the floor like in a cartoon. Your problem. This is unlikely to happen if you had that manufacturer recertify your car. It's much safer for the consumer because it's going to meet certain rigorous quality standards. That's the important part. The problem and the notes that you want to remember on these cars is that they are typically newer cars, like under 5 years old, and they typically have lower mileage, under 60 to 80,000 miles. And this is the key. Because it's so much safer for you, and because more work went into that car, but the correct kind of work that you want, the price will inevitably be slightly higher than it will be for a non-certified car. You can expect the price to be higher by 5 to 15%, roughly. And since you're going to be paying more, it's well within your right to ask, well, what am I getting? All right, let's talk about what you get with the CPO. You get a multi-point inspection. There's usually like 100 to 200 checkpoints that they check. And you get a manufacturer-backed extended warranty. Very important. Compare that to a non-certified car. It's as good as is. You got some problem, you bought it, okay, that problem is your problem. And the non-certified cars are usually sold by private sellers or many independent dealerships. Now, independent dealerships have their own checks that they provide, and they'll tell you it's amazing, but you can't really verify. There's not that level of transparency usually of like, did they do the same check as a certified? You don't know. But what you could do is buy the extra warranty or additional inspection separately. So even if there's a car that's not certified, you can get that separately. Of course, it will cost you more money, but it's a really important distinction. If you're negotiating a car price or if you're researching cars, a car that's certified by the manufacturer gives you as a buyer a peace of mind. And in practical terms, of course, you'll have to factor that into the dollars and cents that you eventually negotiate for yourself. Now, if you're savvy in cars and you can check many of the things on your own, you may be skeptical of what the certification provides, but generally speaking, most people do feel a lot safer. Some people say they get a little duped because they get a big extra fee for not a lot of extra reassurance. But again, if you're not a car person, not a car expert, and you get that extra warranty, that may be worth a lot to you. So it's very important to understand this distinction of having your car being certified. Now let's discuss how used cars get priced by the dealerships so that you can understand how much room you have to negotiate. So for used cars, there is no such thing as MSRP. If you're not sure what MSRP means, it stands for Manufacturer's Suggested Retail Price. If you buy a new car, the new car will almost always, at a dealer, you'll see there's a little sticker. It says MSRP price. That's what the manufacturer suggests the price is. The dealership does not have to follow that, but generally sticks close to that, at least as a starting point. But there's no such thing for used cars. Used cars don't get priced with an MSRP, but through a combination of the following factors: market conditions, reconditioning costs. These are costs like repair. When the dealership gets the car, they have to do some fixing of little cosmetic things here and there that cost them money. Then there's the vehicle history that actually dictates the price quite a bit. Then there's of course the dealer's acquisition costs and the dealer's needs and strategy. Maybe they have to move the car, maybe they don't. So all these factors go into the price that the dealer gives the potential buyers. With that in mind, it's really important to understand how dealers actually get their cars. It's through a large combination of factors. They can take trade-ins. When they sell a car, they might take an older car. They might get cars at auctions. They might take lease returns. They might take rental fleet sales. Like rental fleets are from rent-a-car companies. When they have outdated models, they sell those to some dealerships. And dealerships can make direct purchases from individuals. These are all the ways that car dealerships can acquire cars. Naturally, as you can guess, each has a different acquisition cost and different profit margin. Here's an example of how they might price a car. Let's say they buy a car at an auction for $15,000. That's what they bought the car for. But they spend more on that car. They might spend an extra $1,500 on reconditioning. That's like detailing, new tires, new brakes. And that's not just parts. That has labor costs. Also, they incur other costs. They have to pay for that spot on the lot that the car takes while it's not sold, for storage essentially. So there's a lot of extra fees that the dealership incurs. So let's say they spend that. Suddenly the cost is over $16,500 and the listing might be $18,000 in the beginning. Naturally, it goes without saying that almost everybody who comes in says, oh, $18,000 listing price, I want it for $15,000 or some discount. So what happens is the margin is either low or non-existent, right? If you have a profit that you can make of $1,500 and somebody asks for a $3,000 discount just because they don't know the discount range, or even if they get a discount of $1,000, okay, you only are making like $500 on this car. So much effort went into the car, fixing it, buying it, acquiring, etc., hosting it, selling it. Kind of a difficult business for the dealer. It's not so bad for the dealer because the dealers can earn additional profit from other revenue sources. For example, they might give you the loan. They might make money on the car loan. They might make money on selling extended car warranties, and they might make money on the trade-in that you might sell them and other ways. So they're okay. They don't just make money on the sale. They make money in a bunch of different ways. So it can add up. Although overall, it's a volume business rather than a high profit business. And their business is essential for us to understand because as a buyer, you can use some of this information. Because you can ask for things like, how long has the car been on the lot? You might ask how they acquired it. And cars that were acquired in certain ways, or cars with 45 plus days on the lot, may get extra discounts because the dealers need to move them because they need to put another car in that spot that does sell. So these are all the things to ask about a car. Every car is different. So what does that mean for the negotiation? Dealers can go lower on the price than what you can expect Because let's say their initial profit margin is $1,500 or $1,000, but they could potentially make about $3,000 of profit overall per car if they upsell you everything with extra fees and everything. So you have to be smart about what to concede, what to not concede, and where the margin is so that you know how much not to over negotiate. And once you know their floor, you want to aim for somewhere around $300 to $1,000 just above their floor so that they can still sell you the car. They'll take that and you'll get the best price. But if you over negotiate, they would lose interest because they have to spend their time selling to another customer that does buy. Or if you really lowball them on the price, and if you don't have a bank loan offer, they might give you a very, very unfavorable loan percentage, because if you have no choice, because if you have no bank option to finance the car, then they have all the control and they can give you a very unfavorable loan, which will make that money back for them that you negotiated on the price. So don't over negotiate. Make sure they're happy, while at the same time know the rate that you need to get, that's the best rate you can get or approximately close to it, and the best price on the car. That's how you'll know where you're getting to the point where it's still sellable for them. They can still sell it, but you've gotten as much of the discount as you can squeeze out from this particular car. Now let's take a more practical approach to learning how to negotiate for the best used car price by examining what you can actually say and looking at a sample of a used car price negotiation. So let's say, for example, if the Kelley Blue Book, abbreviated by KBB, estimates, let's say, $20,000 for a certain car. Of course, you want a lower price than that. So you want to start at a slightly lower price, maybe $19,000, maybe $18,500. And you would explain your rationale. Like maybe the tires are not new. Maybe you need some additional service costs. Maybe there are some extra scratches or tiny dents. Not perfect. So you want to knock down the price a little bit. What you don't want to do is come in and say something like, I want to pay $12,000, because that's just ridiculous. It's never going to happen because the dealer just doesn't have that kind of a margin. They would just lose money. It's an impossible price. Even if they wanted to, they can't. It would be cheaper for them to never have that car in the first place than to give it to somebody for a crazy discount. So the salesperson will just kind of look at you funny and will not really take you seriously, because they'll understand that you haven't done your research, which in their eyes paints you as a not serious buyer. You might be a very serious buyer, but it just shows a lack of research when you create an offer that's so far off than what's realistic. So you want to give a slightly lower than the Kelley Blue Book offer, but not a ridiculously much lower one. That's the tightrope you want to walk. And what you can also do is bundle next negotiation points. For example, you might say something like, if you can include also the registration fees and fix the windshield or whatever issue there might be, a dent, that windshield is just an example in this case, then you can say, I'll agree to the X amount of the car price out the door. Meaning not only you got a good car price, but you waived yourself extra fees here and there, extra little things that dealerships typically add on. Because if the car price is listed at like $20,000, you're not going to pay $20,000. You're going to pay more because there are extra fees, there are taxes. Some of those things can be waived. That's what you want to make sure to negotiate during the negotiation process. You concede by saying, I'm a serious buyer, I'll buy quickly if I can get these concessions like extra fees to be waived and the price that I want. That makes the negotiation faster, and it gives you the discount that you would actually want. And the salesperson is happy too, because they're dealing with a serious buyer. Realistic sellers are generally okay with giving a discount if they can move the car, because they generally work on volume. They're not penny pinching $1 or $2 here and there. They want to make a bit of a profit on a bunch of cars, not a lot of profit on one car. Of course, they want to make a lot of profit on one car, but they know that's not really their business. So they'll work with you on discounts as long as you say the right things and ask for reasonable discount amounts. Now, in addition to whatever the listing price might be and your hope for the price that you want to pay, there are additional things you can do to incrementally decrease the price. Keep in mind, you cannot decrease it to a crazy level, but you can keep decreasing it. For example, you can say something like, I saw on Craigslist this kind of a car, maybe slightly different, but very similar, is going for a certain price, or the next dealership next door has this price. So you can ask for a price match. A price match almost immediately knocks a price down. There's almost no conversation. Oh, price match. Okay, fine, price match. Typically, dealerships concede to you on the price match. And then you can find additional wear and tear, scratches, tiny dents, interior wear and tear. These are things that dealerships should fix before they try to sell the car. So if those kinds of cosmetic things are still around and they should have taken care of that, you can get that discounted. That's also a reasonable thing to ask, because they should present the car without that obvious wear and tear. And if the wear and tear is there, you can get a little bit of an extra discount. That's reasonable. You can also ask, what if I put down a bigger down payment? What if I finance through you and not the bank? Because a large part of how dealerships make money is through the financing. Because if the bank gives you the loan, the bank makes money from you. But if the car dealership gives you the loan, the car dealership makes more money from you. So a really good tactic is to get a quote for a loan from a bank, bring that to the dealer and say, I was going to finance through the bank, but if you can give me a lower price on the car, I can do the same rate that the bank gave me with your dealership, meaning the dealership will make more money from you from the loan, so they can give you a bigger discount on the actual car. This is key, this right here, because very often the margin on the actual car is not very big for the dealer, but they can make up to another maybe $500, $1,000, depending on the price of the car, obviously, and the loan rate, obviously. But they can make a substantial additional amount on the loan that they can give you. And you can say, hey, I've got the option for the bank, but I can't do it through you. They will say, yes, do it through us, and we can give you some part of that money that we would earn from that loan that would give you as a discount for your car. That's really realistic and that's savvy. So definitely do this one. This is a great idea. Now, additionally, there are some other things you might say. Here are some examples. A common negotiation tactic is to create a ceiling in the seller's mind. You might say, my family's budget is $20,000 or $10,000 or whatever it is, and I have to keep the purchase price under that. We discussed it as a family. This is the out-the-door price we can be fine with. We cannot go higher on the out-the-door price. We'd like to take this car. It's a little expensive for us, but the price we can do is this price that you tell them. And you say, I could ask my family, but I'd have to go back. We'd have to discuss it again. I might not be able to do this for another week or two, so I'll come back in maybe 3 weeks. The salesperson does not want to hear that. They need to make that sale ASAP. They know if you walk out that door to discuss more, you might forget about it. You might go to a different dealership. They cannot lose you this way, because so many people just don't come back. When they say, I'll think about it, in reality, that often means I won't come back. So if you say that, the salesperson is more likely to concede to the price you can do now rather than let you walk out the door. So that's an artificial ceiling you can create in their mind. And you can combine this with the other tactics, because if you have a set price, it's really low, like you lowballed the dealer, you can combine this by saying, hey, okay, fine, I understand it's low, the car is way more expensive, but I can finance through you, I can concede in other things, and that's where you have the other levers you pull. You might say, okay, you don't have to fix that little scratch, you don't have to fix the brakes or something, although it's a good thing to get the brakes fixed but the little cosmetic scratch, the little interior wear and tear, you know what? I can live with that. If you give me that low price, I can take it as it is now. Don't have to fix the cosmetic issues I found. And suddenly, all that tire kicking you did earlier, like, oh, I found that extra scratch and it's annoying for the salesperson. Yeah, it has to get fixed. There's an extra couple of $100 of repairs and labor fees, etc. Suddenly, you've erased that need in the dealer's mind, and you've conceded in other ways, so they can then come down to the price you want because they know they won't have to spend elsewhere on repairs and they can make more money in the loan they give you. This is how you drive the price of the car way down without annoying the salesperson and keeping them still happy because they know they can still make it profitable. This is the last video of the course, so congratulations on completing the course and thank you for choosing this course in the first place. I hope this course was helpful, you've learned a lot, and now you're empowered to get a better car for a better price. And of course, best of luck in your car buying